All right. Happy Thursday, team. Good mood today. No real reason. Markets. Holy smokes. Dow closes 800 points higher. Mind you, the Dow was down 500 points when I first looked at it today. A crazy whipsaw day. I posted about this earlier this week that in order for us to find a bottom, there has to be some sort of capitulation event. Was today the day? 500 points down, not that much. The volatile swing, though. We got bad inflation information. We're going to go over that today. Tell you a little bit about what's going on inside the markets. We're going to look at a bunch of charts, mortgage rates, all that stuff, inflation breakdown. Could it be the turning point for mortgage rates? Could this be the signal, the ultimate signal? One thing we don't get on Barry's chart here that I would love to see is volume. And I'll tell you why. Because there's always a bigger fish. It's like somebody's always got a bigger boat, right? I knew a guy, very wealthy guy, who was buying a $10 million boat. He's almost bought it, came with a crew and everything. And he was on the boat and he was just about to buy it. And someone came by with a boat just right by with like $100 million boat, something totally sick and huge, and made him feel this big. And he didn't buy the boat. Point of the story is there's always a bigger fish. Now, when we look at this chart, this is where it gets really interesting, guys. So I've been talking about how the data points they're giving us and when the market does actually bottom are not going to make sense. We have to watch the price action, okay? And notice that today, that's exactly what happened. Now, that doesn't mean this is exactly correct, but it could be. Hold on, let me explain. Inflation increased 0.4%. Didn't see that coming. More than expected, despite the rate hikes.
Attention. The Federal Reserve's rate hikes aren't doing jack squat, in case you didn't notice.
They will take years to unfold. The Federal Reserve is just making a mess of things right now. I'm not going to beat on the Fed just yet, but inflation was worse. Where is it worse? Let's take a look at the breakdown. Here's where it is. This is everything in one chart. Food. That's a problem. Everyone needs that. Airfare, meh. Utilities, need it. Butter, margarine, eggs, health insurance, got to. Public transportation. Wow, public transportation is up that much. Energy, gasoline, etc. Okay, so this is where all the stuff is. You can see there's some pretty big numbers there, pretty big numbers. But look at this: inflation coming with a surprise bad number. At one point this morning, on the mortgage bond chart here, we were down 105 basis points. In fact, when I first looked at it this morning, I get the text every day from Barry Beebe, who runs mbshighway.com right here. It said down 105 basis points, and I just went, oh my God. My wife's like, what? I'm like, mortgage rate's getting crushed right now. Again. She's like, again? How? It's just been every day. But look at the good news, guys. Here it is, staring us right in the face. Look at the wick. This is why I wish we could see volume. How much volume? Because look, you get a bad inflation number. That should be bad for bonds, right? Bonds get killed. But guess what? Somebody was waiting in the wings as a buyer. Who was it? Is Goldman Sachs pivoting? Who's the big buyer that's coming in and saving the day on a day when we have a bad inflation number? Who came in and bought and held this thing above support here at a very crucial moment where this is the lowest price we've seen. Previously, this is the lowest price we've seen for this bond ever. So we made a new low today, intraday, but we did not make a new low close. This is very good. Now, this little channel right here, this little triangle that we got going on has formed a double bottom. This is a very bullish looking pattern. Could see mortgage bonds scurry higher from here, which would mean lower rates. This is actually a good look. Remember what I said too about when we do find a bottom, there's going to be a big wick involved. That's exactly what we've got on this chart. It's exactly what we've got. Does that mean it's it? We'll find out. It could be. We were still down 9 basis points today, but look at the action. The intraday action, we're up huge. This means big buyers coming in, most likely. We don't have the volume statistic, but you got to think that's what it is, especially with a bad inflation number. So, what I mean by that is exit liquidity. If you were a Goldman Sachs and you were short these bonds, or you wanted to accumulate a bunch of them, you would want to have to do it on a day when there were a lot of sellers. Well, there should probably be a lot of sellers on a day where inflation increased more than expected. Hence the sell off in the early morning and then the buying that commenced the entire day. It's a good sign, guys. I'm telling you. Rates relatively unchanged today. I just locked one of these guys here, 6.81% par rate. No points, no fees. So we're a little lower there. FHA, VA also low sixes for those. Everything else looks right. There is a 10% down jumbo, by the way. This is for a lot of my realtor friends out there. 10% down jumbo. That's a really, really good product. Under 7% on the arms. You have 5-year, 7-year, 10-year arm. I'm going to be talking about that a lot tomorrow, which is a really, really cool product for people who want to buy jumbo. So we got that. We got that. Inflation breakdown, Dow covers. Let's look at the candle. Guys, ready to have some fun? Look at this. I've never seen a candle like this that I can recall. This takes the word bullish engulfing candle to a whole new level. I mean, look at where we opened. Huge gap down. This is the S&P, by the way. Huge gap down, and then just massive green candle. Huge, huge green candle completely engulfs the last 3 days worth of pricing on the S&P 500. That, my friends, is a very bullish candle. Now, it did close right up here near previous support, which has now become resistance. So we'll see what happens tomorrow. But my goodness, my goodness, what a candle close. You saw the same thing kind of happen with Bitcoin today, where it came down and touched the most recent cycle low, just a perfect double bottom. Big move higher here. Still, Bitcoin has got to get through this downtrend. You can get through this downtrend right here. You can maybe see it make some higher highs, but right now it's just lower highs trying to get through there. Dow Jones, very similar, huge candle, just massive candle, took right up through that previous resistance. Seems the Dow might be the leading indicator now. Taking a look at that, NASDAQ was similar as well. Now that said, all these are still in a bearish horn macro setup, which means that we're expecting lots of volatility. Things can go whichever. Who knows which direction they're headed? But we do know that today, that is a candle that's going to have people scratching their heads. All kinds of technicians are going to be trying to figure out what in the heck happened today. How did this go down? But notice also that this was essentially a rally across the board. And these are really interesting to me when everything's green. Okay, like everything was green. All the stuff was green. It's rolled over already. Gold's pretty flat. Oil pretty flat. Bonds pretty flat to down. All the market stuff was up. Everything was up. Huge. Stocks up big. Indices up big. And bonds held their own. You know, bonds had a rough morning, but a great recovery. I got to tell you, that's exciting. It really is, because what's holding this real estate market down? Interest rates, 100%. So I keep talking about the 2-1 buy down. That's what everybody wants right now. It's 100% interest rate. So the turnaround in real estate is going to come when interest rates start going back down. In order for interest rates to go back down, ideally, we would see inflation coming down. That would put a lot of more natural buy pressure on bonds, sending rates lower. Or we could have the Federal Reserve come in and say, hey, we're going to start buying bonds. All they'd have to do is say it. Just have to say it. They wouldn't even have to do it. If they just said it, it would immediately make rates go lower. Anyone who was short a bond would cover and get the hell out of their way. Everybody would. Unfortunately, I don't think the Federal Reserve is going to say anything like that, because they're just so, right now, they're just so hated it. Lost. They're lost. But, so it could be the Federal Reserve, it could be inflation going down, or it could be the market knows something that we don't. One of the things I always say about these types of situations, you're looking for a turnaround, the price action will tell you first before you get the real news. Before it hits CNBC.com, all of a sudden, things like this will be happening. We'll be looking at these bond candles going, wait a minute, why? Why was there so much bullish action in bonds on this day? Why did we get such a bullish looking candle on a bad day for inflation? Well, 3 or 4 days from now, it might make sense. Maybe early next week, we see, oh, there it is. The people who are moving the money around, they know more than we do. They're privy to the information before we are. Not supposed to be, but they are. So this is essentially the way that it goes. This is what happens. You'll see the price action first, and then you'll get the information later. So is this one of those situations? Or are we going to be back at business as usual? Back to this stupid downtrend? Are we going to be back to that tomorrow? Or are we starting something new? That's the big question. I have a feeling that we're going this way. I think we're going to see action going that way. And starting, it may not be crazy, it may just be a little tink, 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 tink. That'd be fine. Slow and steady wins the race. Lenders would love to cut their rates to grab margin right here. It's hard to do with these formations. It's just hard to do. And at the end of the day, if you were short a bond and this started to rally, or you knew something was coming soon, you would want to get out of Dodge. And I think that might be exactly what's happening. So here's what we're going to do. By the way, we're live right now. I should have said this earlier. We're live on Facebook, Instagram, LinkedIn, YouTube, Twitter. I believe finally started working. You want to ask a question, drop a comment, feel free to do so. Otherwise, I'm going to end this pretty soon. I really just wanted to let you know that although the day may have started ugly, the day started really bad, it had a really strong finish to it. There's some resilience here. And as of right now, the recession is very weak, but it's also fragile. It's a weak recession, but it's a fragile situation. It's a fragile situation, and the Fed is basically like an elephant in a living room that's confused about where it is. And so the fragile situation, elephant in the living room, not good, but we don't have those really, really bad signs yet of the recession. Big layoffs, huge deflation. We don't have those things yet. So there's still possibility that we can come out of this thing relatively cleanly. It's still possible. And days like today give me hope. This is why I'm in a good mood, because we just have not seen this kind of recovery, particularly intraday. Look at this. This was the first chart I looked at today. Let's see. We got to go to the futures to see it. And this is what's so unfair about how all this works, by the way. But again, it is what it is. Look at that drop. This is at 5:30 a.m. So 5:30 a.m. Pacific, before the market opens, an hour before the market opens, before you can buy or sell a stock. Look at this candle. This is a 5-minute candle. I've never seen a candle in 5 minutes do that much downside. I just can't imagine what it would have been like watching this live. Just bananas. But look, within an hour and a half of the market open, 2 hours the market open, completely recovered. And then just marched higher for the rest of the day in this channel right here. Isn't that wild? Just wild. So this is a shakeout, is what this is. This is a shakeout or a fake out. And either way you look at it, big money wanted people out of the way. They wanted to buy this market. And they were able to clear people out and then buy this market. So that's got to be a good sign, right? I mean, it just has to be. It has to be a good sign. Tomorrow is Friday. So we'll have a weekend coming up. It will tell us a lot more than the average day. After a day like today, how does this day sit with the market tomorrow, particularly in the bond market? That's really what is driving everything. This is what is going to recover everything. It's going to recover real estate. It's going to recover fixed income. Look at the bonds. Look at, I mean, where's the 2-year? You guys don't show this here? The 2-year bond is over 4. I think it was almost 4.3%. 10-year bond, 4%. You should be able to go and get a 3-year CD for, 3 or 4%. That kind of situation, it starts to impact Wall Street. Look, Wall Street doesn't want you to be able to go make money without taking risk. They want you to have to take risk. Wall Street wants 0% interest rates. The government needs 0% interest rates because remember, the government borrows money to pay its bills. I know it sounds ridiculous, but that's what's been going on for years. So all the macro forces pushing rates would like to push rates lower. The Fed is raising rates. It's doing very little. And the reality is this 0.4% inflation, it's really not bad. I mean, it's really not. I know, it's higher than what people wanted to see. But if you look at what's going on around the world, it's really not bad. Here's the DXY. Let's look at this guy. And notice the inverse movement on this. This is really the dog. The rest of the markets are the tail. The DXY, this is the dollar index, okay? Let's get it zoomed out nicely here so we can see we're still in this upward channel. Red arrows are where the Fed has raised rates. Moving the strength in the dollar is still extremely strong. And even though it had a little bit of a down day today, still in the channel, lower half of the upward channel, still looking very strong. This is a strong dollar situation. When the Fed raises rates, they're making the dollar stronger. It causes a lot of problems for companies that do international business, for anything that's priced in the dollar. So far, the Fed has not managed to really do anything with inflation. They have managed to crash stock markets, crypto markets, crush businesses who do international business and have to transfer currencies. When the problem is worse, or when the solution is worse than the problem. That was what me and Serpa were trying to say the other day. So anyway, DXY, you can see here, retreating a little bit right along the mid channel here, finding some resistance there, still making higher highs, but getting some rejection. The dollar is still strong. This should be good for bonds. This strong dollar should be helping bonds. So which will persist? Which will win the battle of tug of war? Will it be inflation? Will it be the Fed and the strong dollar? Which one will prevail? Because both can't exist for long like this. Or will the rest of the world just go to hell in a handbasket? That's the other possibility. Very well could happen. So I'm excited about possibilities here. I'm excited that we have a shot. I'm excited now to think that, you know what? Because I'm sitting here thinking, guys, and I'm dead serious. I'm sitting here thinking, how long will this last? How long will the market be like this? Are we looking at 3 months, 6 months, a year, 2 years? I've been trying to figure that out. How do I prepare? How do I allocate? Or are it just going to be a few months? And first of the year, things will be fine. All things are possible in financial markets, right? Always remember that. But this day gives us hope. Hopefully not hopium. Hopefully it's true. Hopefully this isn't the fake out. Tomorrow, follow through is key. We want to see stock prices hold or go higher tomorrow. We want to see bond prices go higher tomorrow. That's what we're hoping and praying for. That would be a huge sign, especially heading into the weekend. Probably won't hear from me tomorrow. Go Padres. Beat LA. Give me a call, shoot me a text or an email if you need a quote. We're still crushing on rates. We still don't charge any fees. 2-1 buy down. We do that FHA, VA, conventional. I got you. I really do. I'll take care of you. You, your friends, your family, your clients. I'm here for you. Have a good night, everybody.